Well, the Australian bond markets opened weaker this morning after US economic data released overnight showed promising signs of economic recovery. Not particularly constructive price action in the US overnight, according to JP Morgan's Sally Old, the 10-year Treasury yield up another 5 basis points. We're joined by Kieran Quain from FIG Securities with his view, though, this morning. Kieran, let's just firstly get your take on some of the overnight action with these Treasuries.
Well, the Treasuries have been weak overnight again. I guess it adds to the move that's been happening over the last couple of months. 10-year yields in the US have been climbing towards 3.5% now, moving about 1% higher over the last 2 months. 2-year yields have only moved up 20 basis points over the same period. The yield curve steepened up dramatically.
What is this telling you, Kieran, about the prospects for economic growth, what the bond market's saying, particularly at that longer end now, charting this path back to growth?
Yeah, it is. It's charting back to growth. The expectation is that there will be growth going forward. This recent economic data released is somewhat positive. It's not overly optimistic, but it just hasn't been getting worse. And if anything, just slightly better. That points to growth down the track. But it's not immediate growth, and it certainly doesn't threaten short-term rates at this stage. For short-term rates to climb dramatically or a monetary policy to be impacted, you'd have to see unemployment fall dramatically.
Again, overnight development, Kieran, with this tax plan. Are you surprised that you didn't see more action, at least in the shorter end of the curve? I'm thinking of the 10-year.
In what regard, Carson?
Well, I mean, just the market pricing in a more immediate effect on perhaps triggering some growth sort of in the fullness of time, and not pricing that out in terms of in a later part of the cycle. I mean, you think of the need to act sooner than later. Are they won over by these tax announcements?
Not won over. It's just a continuation of the same theme. I don't think it changes. The focus is still that there is stronger economic data, so the yield curve is selling off.
How attractive do current prices look in the Australian bond market, Kieran? Do you expect any increased buying?
Well, I think at this level, around 5.65%, they are attractive. Australian yields have weakened in line with the US, but not as much. Probably a 2-to-1 ratio. I think Australian yields over the same period over the last 2 months have weakened from about 5.15 to 5.65, whilst the US markets climb 1% higher in yield from that 2.5% level. Do Australian yields represent value? Yes, I think so. In any weakness, I think the Australian bond market will outperform the US market. In any strength, I think it will hold its own.
Will buyers need any more signs or any more catalysts?
Any more catalysts
to buy from this point? Are we waiting for any signs out of the US?
Out of the US to buy US Treasury yields, I'd suggest that the reversal in the current trend of economic releases that have been somewhat stronger would have to be reversed. Not necessarily a reversion back into sort of this double dip scenario that had been speculated on previously, but weaker data before strength emerges again in that market. I think specifically the yield curve shape is very important. Consumers are buoyed, or investors are buoyed, and the US share market's rallied 8% over the same period, and the data points to forward growth, not immediate growth, but forward growth, and markets will price in for what they expect going forward, not the immediate situation.
That's the interesting thing. Since Ben Bernanke flagged this QE2 back in August, we have seen a rally actually of about 15% in equities. Now, when you get that almost that yield story turning on its head, and so you can look at the attractiveness of equities relative to bonds, why would you be in the US bond market right now?
Why would you be in the US bond market? Well, it's about an expectation of growth going forward, and inflation going forward, and there's also a comparative versus the equity market level. Growth might well emerge, but as long as it's not inflative, that would be a good reason to invest in US Treasury yields.
All the signs are, though, that there will be inflation, if not tomorrow, not next month, then maybe in 12, 18 months.
That is the stated expectation for the yield curve, definitely, yes.
How is the European debt crisis playing into this? We had the Moody's placing Spain's rating on review for possible downgrade overnight. Some responses this morning, I've seen it, actually markets were quite moderate in their reaction, or measured in their reaction. What's your view of how markets are handling this issue right now?
Well, in relation to cross or transatlantic position of economic focus, obviously the US market or the US economic data is improving and the Eurozone is weaker, and there's somewhat a deflection there into the weak spot of the world or the globe being Europe. And this has been signalled by Irish bailout package, weakness in Spain, Portugal and now Belgium. I think, am I surprised that there hasn't been an immediate initial reaction to overnight events? Not really, because this has been playing out for a long period of time. It's been well telegraphed, and fiscal austerity is going to be required in Europe, and it's going to be deflative in that sector.
How important will the auction of their debt therefore be in about 24 hours' time? Who will be the buyers? Because you have seen the likes of China showing remarkable appetite thus far for other peripheral Eurozone nations' debt, principally being Greece's. Will they go and prop up Spain's issuance?
Oh, they might well. The attractiveness of buying Eurozone debt at discounted prices is there, but there must be a plan going forward to a plan of fiscal austerity that digs them out of that hole to make that yield attractive in the long term.
Hey, Kieran Quain, thanks for the update on bond markets overnight. Appreciate that. From Fixed Securities camera there, up in Queensland, and let's switch over to hear a little bit more about the